Hello, good afternoon, everyone. My name is Ella, and I am from the Consumer and Investor Office at the SC. Once again, we would like to welcome everyone to our Digital Literacy for Seniors program. The objective of this program this time round is to build your knowledge on investing in cryptocurrencies through Registered Digital Asset Exchange. Nevertheless, before we begin, on behalf of the SC, I wish to record our appreciation to higher seniors for their assistance in promoting this program. We are pleased to have with us today Mr. Daniel Chan for Trading Strategy at SINEGY Technologies Sdn Bhd to present on the topic Investing in Cryptocurrencies through Registered Digital Asset Exchange. Allow me to share a brief background on Mr. Daniel. Mr. Daniel is one of the founding team member of SINEGY, one of the 3 regulated cryptocurrency exchanges in Malaysia. He has been heading various technology firms for 20 years, involved in system development ranging from customized system for companies to total solution for over 30 large multinational and governmental projects. He was also an early crypto adopter by running cryptocurrency ASIC mining and spot trading operation from as early as 2012 and derivatives trading since 2018. Now, please stay tuned to the end of the session as we will have a short Q&A session followed by a pop quiz session for all participants. As mentioned earlier, total of 1,500 ringgit in online vouchers are up for grabs. There will be 5 top winners and 25 consolation prizes. Further to this, we would like to invite all the participants to take the survey. Next. Please do follow us on our social media platform for useful information on investing and latest update on our initiatives. Now, I will pass over to Mr. Daniel to share his presentation on investing in cryptocurrencies through Registered DAX. Mr. Daniel, you can share your slides.
Hello, everybody. So my name's Daniel Chan. Let me explain a bit about myself. I do trading strategy in SINEGY. So trading strategy meaning that I try to find the most profitable way to trade, and I find systems on how to make it work. So a bit of background. I'm actually from a technical background. I was a computer programmer for quite some time, for the first 10 to 20 years of my life. Then after that, I got into cryptocurrencies in about 2012. I got into it because I was doing mining. I'm not sure you've heard of it, but about Bitcoin mining. So I've been doing Bitcoin mining in 2012. In order to sell my proceeds from the mining, I had to do some trading. So when I did the trading, I realized, hey, trading is something that's more for me. And I got into it since then. So let's get on into the whole question and answer thing. Hold on, Let me get this screen. Okay, so first we will start with an overview of what cryptocurrencies is first. In order to understand how to trade, in order to understand the whole industry, you have to understand what crypto is at the very base. So I'm splitting this presentation into 3 questions: what, how, and why. So what crypto is, how it works, and why we need to use it. All right, so first question will be, what are cryptocurrencies? Okay, so basically it is a trustless network system. All right, when I say trustless, I mean there is no single central authority that has an oversight over the entire thing. There isn't. It was created at first by an unknown person called Satoshi Nakamoto. Nobody knows who he is. He basically published the system online. It went live, and after that, the system self-regulates by itself. So basically, what we have here is a system as a machine with no human intervention that is taking care of all the transactions that's happening through the blockchain. Now, I'm speaking about Bitcoin at the moment. Now, there are many others out there, but for the purposes of this webinar, as a beginner webinar, I will be mentioning more about Bitcoin. So the way it works is that you have a system that self-regulates, that checks transactions on the blockchain. And because there's no human involved, it is completely trustless. There's nobody to trust. It's only the system. So that's why you don't need trust to run the system. So number one is trustless. Number two, some people call it a digital currency system. Do note that different countries have different criteria of what a cryptocurrency is. So, like for example, in Japan, it's recognized as a currency. In Malaysia, it is recognized as a security. So it all depends from country to country. So you do need to take note about that. Then you have countries where they do not specify what cryptocurrency is. So that's a gray area. In those areas, it's up and coming. There will be regulation coming sooner or later. So it's good that all of us learn what cryptocurrency is, right? It's what is coming right now that you have to learn. So second thing is that it is similar to gold. Well, yes and no, but it is the closest you can explain what cryptocurrency is, right? Because it is a store of value. That's what it is, right? If I give you a Bitcoin, okay, and you keep the Bitcoin, right? There's nobody to tell you that the Bitcoin is worth how much. It is what is worth on the world market, just like gold, right? It's not like cash. It's not like cash where it is a piece of paper that a central bank tells you how much it's worth. It isn't. It's not affected by forex rates and stuff like that. So it's similar to hard coins of gold. It also means that if you lose it, it's like you losing the gold. Same thing. Okay. So no debt but barrier. That means whoever owns it, whoever is holding it, owns it. Okay, then it's a controlled supply. Again, we are speaking about Bitcoin. There can only be a maximum of 21 million Bitcoins in the world ever, and it will slowly become less and less the supply of it. So miners will create the Bitcoins, and then as time goes by, there'll be less and less supply. This is to control inflation. It's built into the system. So if you have cryptocurrencies where the price goes uncontrollable because the supply, they keep printing the supply, they keep printing money. So this is something that's an advantage over the global fiat system. Fiat meaning your traditional currencies like ringgit and USD, where they print the money. So this is a controlled supply. You can't print anymore, right? More than 21. Then the fourth item is that it exists on top of blockchain technology, right? On top of blockchain technology. So I will be explaining a bit about blockchain soon. So how does it work? All right. So there's a saying by the CEO of Google that says that Bitcoin is not duplicable. So let me elaborate. Cryptocurrencies in the world, every time you do a transaction with a cryptocurrency, that transaction cannot be copied, cannot be duplicated, cannot be modified, cannot be deleted. It is what we call as an immutable transaction. All right. So I'll explain further. Okay. So I believe all of you will know what this is, right? This is your buku tiga lima, right? If you go to a grocery store years ago, you need to, let's say, buy something with credit. So you go to a grocery store and you say, okay, I want to buy some rice. Can I pay back next week? So the grocery store guy will then, okay, he will whip out a new buku tiga lima for you if you're opening a new account. And then you will then write down in this buku tiga lima. Well, I know it works in different ways in different parts of the country. Some will have two copies, some will have one copy, some will sign on the book. But for purposes of this explanation, let's assume there's one book and both of you sign on the book. All right, both of you agree on a transaction that you have bought rice and oil, let's say, and then next week you come back again. He'll open up the book, and then you all will settle the balance. All right. So this buku tiga lima is the equivalent of a transaction in cryptocurrency. All right. So the way it works is that, let's say, let me on this. So let's say, for example, okay. So let's say, for example, you are here. All right. You want to send from, let's say you are Ali, right? You're Ali over here. Let me make the screen a bit smaller. Okay, hold on. Okay. So let's say you're here, you're Ali, and your Buku 35 says you have, let's say, 1 Bitcoin. All right. You then send it to Bob, let's say. Bob then writes down, says, okay, I have 1 Bitcoin. Yours is done. I have 1 Bitcoin. Okay. Then after this, maybe Bob sends to Achong. And Achong says, okay, I now have 1 Bitcoin. Check. And then Bob says, okay, I am finished. I no longer have 1 Bitcoin. So the way it works over the network is that every single transaction is trackable. Every person you send it to throughout history of that Bitcoin is trackable, right? It's like having a huge Buku 35 in all the networks of cryptocurrencies. Okay, so basically it is trackable and it is always there for you, for Ali, for Bob, to Achong to see, for everybody to see. Okay, so it is a very open system. Now, some of you might worry, okay, then in that case, if everybody can see, what I sent to Bob sent to Achong, then where's the privacy? Well, here's the thing: the transactions, there are so many. There are more addresses and transactions and wallets and places where you can keep cryptocurrencies in the world that there are grains of sand on the beach. So it's impossible for someone to specifically look for you, for your address, for your transaction, for your Bitcoin. It's impossible, right? Unless they know exactly where to look. So again, even if they find exactly where to look, they wouldn't know it's your wallet. So this is where huge numbers matter. All right. So I'll explain further a bit. Now, when you do the transactions just now, right? You did the, if let's say Ali sent to Bob, for example, right? We have what we call as nodes. These fellas here, right? All these blue dots that you see here, right? These are nodes throughout the world, right? They are nodes connected to the blockchain. So nodes are computers that hold a fragment of the code of the blockchain. That's a simple way of explaining it. So what happens is that all these computers, you're talking about tens of thousands of computers around the world, they each have a copy of every single transaction that has ever existed since the beginning of the blockchain. And every time, let's say Ali sends to Bob, for example, Ali sends to Bob here, right? Every single one of them will have to check, okay, this is correct, this is correct, this is correct. Every one of them have to check that that transaction has happened. Okay, so I'll explain a bit further in the next slides. But do note that there are nodes, tens of thousands of them around the world with copies of every single transaction. And every time a transaction happens, they will check to make sure that it is correct, a correct transaction. Okay. So here's a typical, what does a good currency look like? Cryptocurrency transaction look like? So let's say you're Ali, all right, and you send a Bitcoin to Bob. So when Ali sends to Bob, the transaction will generate what we call as a transaction ID. So Bob will ask Ali, okay, you said you have sent. So what proof do you have? So Ali will say, okay, here's the transaction ID, right? So the transaction ID is generated by the blockchain whenever you send a Bitcoin. And it's like a receipt number, right? It's a receipt number that the blockchain gives you. You know, you send 1 Bitcoin, the blockchain then gives you, okay, this is the receipt number. It's actually called the transaction ID. So whenever someone asks you to send Bitcoin, okay, someone asks you to send Bitcoin, um, you have to make sure that you get this transaction ID. Right? This is important because there are a lot of scam cases out there where people say, oh no, I have not received any Bitcoin. Please send again. Then maybe you say, or you segan a bit, then you maybe go and buy Bitcoin again, and then you send again thinking you made a mistake. So you have to be sure there is a way to check. Now it's beyond the scope of this class to show you in detail, but it's something that you can look up and research further. All right. So remember, the proof of a transaction, whether someone sends to you or whether you send to somebody, is the transaction ID. All right. So this is important for you to understand. Okay. Okay. Sorry. Okay. So when you check the transaction ID, it will then go to the blockchain. And then in the blockchain, all these nodes will then check, whether or not this transaction is valid or not. So they will say, yep, yep, yep. All of them will check, yes, yes, yes. All will say it's valid. And then once it is considered, okay, this is valid, that means this is a valid transaction. Okay. It will then tell back to Ali and Bob, okay, yes, Ali has paid. And then they can continue on with the business. Okay, so this proof of transaction is very important in the blockchain. Once you understand this, you understand that whenever you send or receive Bitcoin, there is proof of this happening. Okay, so important in a lot of scam cases, a lot of these proofs are not given. So it's important for you to make sure that these proofs are given. All right. Okay. So let's go on. So yes, again, the blockchain is the only place for you to get the truth. Right? It's the only place. It's the single source of truth. So important for you to always check. Don't trust other platforms, other systems, other people. No, only one, which is the blockchain. Okay. So why does it matter? Right? Why cryptocurrencies? Why not our normal bank system? So let's zoom out a bit. Okay, Bitcoin or any cryptocurrencies, its price is based on a global price, right? It's not based on a typical country or a forex country, right? So so for example, access to financial services, right? For those who can't get a bank account, for example, those who are bankrupt, those who cannot meet the requirements to open a bank account, for example, for people who, for various reasons, cannot open a bank account, right? We've heard cases in certain countries where if you are a poor farmer in a village somewhere, you cannot get access to a bank account because the bank deems you unworthy to open a bank account or not worth the effort to open a bank account because the amount of work in certain countries is huge. So India is one example. All right. So for these people, the only option to access financial services is through cryptocurrency platforms. So cryptocurrency platforms will be like, like Kiva or other sites. There are many sites out there where you are able to store cryptocurrency as your store of value, and you can have access to microfinancing as well. So let's say you want to borrow money, right? You can't borrow money from a bank if you don't have a bank account to prove that you have money in the first place. It becomes a chicken and egg problem. So if you have access to a cryptocurrency platform, most people can have access to it. You can have access to loans and financing as well. So that's one way. The third one, cost effective remittance, is something that's been going on for years. I don't mind telling you that the remittance between South Korea and the Philippines, retail remittance, all right, 60% is via cryptocurrency. 60%. Now, when I mentioned retail, I meant not going through Western Union, not going through the bank, not going through those institutions. Retail, peer-to-peer, direct remittance, 60% is through cryptocurrency. All right. So the reason is because they bypass middlemen. There's no bank. There's no places like Western Union, for example. There's no forex exchanges. They bypass all of that because every one of these middlemen will add on fees. They'll add on the spread that they make between bid and ask, the spread between forex rates. So they add on, and the cost increases. Time it takes to move money increases. So here's an example. Okay, here's an example. This was the pricing back in 2018. No sound. Wait, got sound? Got sound. Okay. Sorry. Okay, so here is the pricing that was in 2018. Um, so imagine during a time of hyperinflation. All right, there was a time when Iran went under US sanctions during the Trump administration, right? And the value of the Iranian real dropped really, really fast, right? Really fast. So if let's say, for example, you were holding Iranian real, right? If you don't convert to USD, your money will become worthless. So if assuming you're an Iranian, let's say, right, and it dropped really, really fast, whatever you're holding, your country's currency will become nothing. Not say nothing, but it become really, really bad. So your only option is to convert to USD if you go through the normal banking solution. So with certain countries where the central bank does not allow exchange to USD, all right, or they exchange it at a very bad rate. Now, if you notice that the government rate for 543 million Iranian real was 1,006. The actual rate should be 4,000 before the drop. So you can imagine the difference in value of your money. Now, imagine if you were holding Bitcoin, you were not holding Iranian real. If you're holding Bitcoin and when it dropped to a very low level and you're holding Bitcoin, not Iranian real, you send it to another country and you sell it there. The value you'll get will be a lot higher than the Iranian real you're holding. Now, let me tell you a bit of story of an experience I had. I was in Iran in 2018. Right? I was in Iran during the hyperinflation crunch, and when I went to the country, when I wanted to change euro, one single euro $100 note could get me a half-inch stack of cash of their money over there, and the banks would not sell me their money. I had to do it from the person on the street. So they can't depend on the central bank during times of great crisis, right? So what do? They need to convert the things like Bitcoin. So if I sold Bitcoin there, I will make quite a bit. So here's the thing: Bitcoin becomes a hedge. It becomes a hedge against hyperinflation. Okay, so what are the costs, right? So you have the middleman. So I'm going to give you a real life example. If Ali wants to send US dollars to Bob in the US, he has to go through a few hoops. So Ali, let's say, goes to Maybank. Maybank, then he deposits, or he has already ringgit in Maybank, and he tells Maybank, okay, I want to send to Bob's account in Bank of America, let's say. So Maybank says, okay, I will charge you a fee, and these are my bank rack rates. I will then send this money to what they call as the intermediary bank, right? Every single region of the world, there is an intermediary bank that processes SWIFT or telegraphic transfers. There's always a bank in between them and let's say Bank of America. So these big banks, these intermediary banks, they are like JP Morgan, Goldman Sachs, huge banks, commercial banks. So, okay, so your ringgit is converted to USD, sent to this bank. All right, this bank will then process your USD and they will add on fees to it. And they will add on fees to add on processing time. And then they will send it onwards to Bank of America, which then credits Bob's account. So, in order to send one time money, you have to go through three different banks. Now, this is just an overgeneralization, but basically, you're talking about this kind of intermediaries, right? So, these three banks is what costs time, effort, money. This is friction, right? In normal financial institutions, normal ringgit terms, right? So, again, three banks, extra money, extra costs, extra time, extra friction, extra people needing to process it. Okay, so it's important because in traditional transaction, you have many intermediaries that you have to go through. It takes, it takes a long time. And the SWIFT network has been around since the 70s. It's something that needs to be upgraded. So one proposal was to use digital assets, use cryptocurrencies to cut through all the chatter and send money directly without an intermediary. All right, because everybody has access to the blockchain. Everybody can see a transaction has gone through. The proof is there, right? You don't actually have to send money over physically, right? Money is actually just recorded in the blockchain. Okay, so summary on crypto. It is cheaper, faster, right? Because less people, right? Less people to add on, less intermediaries. less errors. Okay, now it's faster also because when you send from bank to bank, you have cut-off times. Cut-off times mean that, if you miss a cut-off time, it is slower. Crypto, no such thing. As you send, you straight get it. We have less errors because no human is involved. The blockchain is, is software, completely software ridden, and less interventions. Now, when I mean by less interventions, I meant regulatory restrictions from country to country. So less interventions, right? Because they might ask you for more documentation, for example. So if you have more documentation, proper documentation, then maybe you can go through properly. But sometimes, well, human after all, you might send the wrong document, or you might answer the wrong thing, and then your transaction might get cancelled. So in cryptocurrency, there is no such thing, right? No such thing at all. No KYC, no AML. Okay, so here's the thing. Why invest in a regulated DAX? Why? So here's the thing. Um, in a regulated DAX, the three of us, right, which is Luno, Tokenized, and of course us, Synergy. Now, we are all regulated not just by SC. We have trustees that is regulated by Bank Negara. So basically speaking, all the ringgit that you deposit in our account is not actually in our account. It's actually in a trustee's account that is regulated by Bank Negara. We don't touch the money. We can't touch the money. So in summary is if we run off in the middle of the night, we can't take your money with us. Sorry, we can't take your money with us. So this is one. This is number one. All right. So we can't run away. There are unregulated platforms there where they ask you to bank into their account, their personal bank account, or even that platform has a Sdn Bhd and a proper Sdn Bhd bank account. They can still take your money and run off to another country another day, anytime they want. We can't. All right, the bank account is run by a trustee. Uh, Cryptocurrencies itself is kept in these wallets. Now, these are what we call as cold wallets. In technical terms, they're called multi-signature cold wallets. So what happens is if we want to withdraw cryptocurrencies, right, both the trustee and us have to do so at the same time. It's like those rocket launcher codes, right, where both parties have to put in a key and turn at the same time in order to withdraw. So that's the thing, correct? So that's the thing. When you turn and then when you withdraw, yes, it becomes more difficult for hackers in order to get it out of the wallets, right? They will have to hack both sides, both both parties at the same time in order to withdraw the cryptocurrencies. Okay, so policy procedures are regulated. So in essence, we are actually a capital markets institution. We are a financial institution. So we have safeguards in place. So let's say, for example, we have people who are trying to manipulate the market, for example, right? We have safeguards in place to prevent that from happening. So let's say a big whale comes in, suddenly wants to buy out the entire market, drops the price, in an incredibly short time. There are safeguards to prevent that from happening. And of course, all record keeping is something that has oversight by the Securities Commission, right? So this makes sure that we don't make mistakes with your records. So the third one is something that are of more interest to new investors. All the crypto that we listed are high market cap, which means that we only pick those that have a market that people want to buy from you anywhere else in most exchanges around the world. Okay, so we make sure that we pick those that are not unknowns. They are popular coins with huge volumes elsewhere. So you can't, we are not one of those exchanges where you put your money in, you buy a particular coin, and when you withdraw, you have nowhere to sell your coin. So no, we pick coins that when you withdraw, you can always sell it anywhere in any other country, anywhere in the world. Right. So this is something, again, this is the reason why sometimes the SE, it will take time for them to approve new coins, right? Is to make sure that these are the right coins to protect the public. Okay, so what is the risk of investing? Well, Crypto is highly volatile. I can see that, right? It's highly. So when I say high, I mean on a daily basis, you're talking about 10%. It's both good and bad. If you do not know what you're doing, it's bad. If you know what you're doing, it's quite profitable. Because what most traders want is to be able to have highly volatile movements, right? Because you can make from buying and selling, right? From price movements. If you can, if you are, a super guru and you can time buying it at the 10% swing, you make 10% every day. Of course, it's also a risk because you can also lose 10% every day. So that's one of the risks, right? Very volatile class. So you can see here in the screen, as you can see in the screen here, right? This is on the 26th of April. And at the price, you're talking about here at 47,178. And then this is the price on the 27th. So you notice it's 27 plus here. And the price you're looking at is at 54,000. So you can see in roughly about the day, the price has moved 7,000 plus in a single day. So obviously this going up is happy times for everybody, but it can also drop 7,000 plus in a single day. So that's how volatile it is, right? So this is something for you to be very sure when you get into Bitcoin. So cryptocurrency itself, now the technology behind cryptocurrency is very, very safe. All right, very, very safe. But the platforms, right? The platforms itself may not be, because the platforms are still built with code. It's still built with by people. Even though the blockchain itself is very safe, you have to be careful of the blockchains. I'm sorry, of the platforms that are keeping your cryptocurrency. So therefore, what I advise is that if you're not actively trading, keep your bitcoins in your own wallet that you hold yourself. All right, you hold yourself. So, so this is something that the SC has taken very careful pains to make sure that your investments are kept safe. Because in our case, if let's say for example our platform crashes overnight and we disappear into the night, right? Your ringgit can be given back by the trustee, right? Because they hold it 100%. Your cryptocurrency wallets, um, it can be taken back by the trustee as well, because the way it works is that even though you need both our key and the trustee's key in order to open the wallet, there is a third key, right? There is a third key that is held by another third security company that with the correct legal measures, they are able to release their own key together with the trustee to open the wallet. So with proper legal measures, whatever cryptocurrency that is in the wallet can be retrieved and given back to the public, right? So these procedures are all in place just in case something happens to us, right? So, but on platforms that don't have such regulation, if they disappear, there goes your crypto in their wallet, because they can just simply take the wallet and there's nothing you can do about it. But for us, we have backups upon backups upon backups. So that's the way it works. Even if the trustee themselves bankrupt overnight, touch wood, we can also go to the third party security company in order to get back the money from the wallet. So again, very, very safe. All right. Now, one more risk is that the tech moves very, very fast, right? Bitcoin is considered very old tech, even though it's only 10 years old, it is also considered old tech already. So be very careful when you invest in the coins. Like some people say, oh, this Duran coin is fantastic, go and buy. Or this Rambutan coin is great. You have to make sure you do your research before you buy the coins, whether the coins belong to a good company, whether good progress has been done, and even then it's still very risky, right? Because you are investing in a coin based on a company that is new. So the best way to do will be to invest in coins that are well known, all right, and they have traded in huge volumes. That is the best way to do it. Okay, you buy and then you hold. Try, if you're not familiar with technology, you're not familiar on the technical sense, it's quite risky in order to go into new coins. Quite risky, right? So how do you check whether the coins are there, are the right coins? So as you can see here, this is CoinGecko, right? CoinGecko is one out of the many sites, but this is one of the top sites in the world that indexes prices, right? Indexes coins, indexes exchanges. So if someone asks you to buy a coin and it is not in the top 20 or top 30 in this list, then be very careful. All right, be very careful. At the very least, it must be in this list, right? Because these companies, these index funds, these index sites, they make sure that they will research your coin. They will make sure that it has been traded elsewhere and there is movement, right? If your coin is based on a single exchange, right? So let's say platform ABC, unknown platform, unknown exchange, a coin inside an exchange, you have no idea, it has never been withdrawn, then they will not list it on this site. All right, they will only list coins that can be withdrawn out of the exchanges and it is able to be sold elsewhere. Okay, so be very careful there. In terms of scams, many people have fallen for these scams where they put their ringgit into an unknown platform to buy an unknown coin. And when they try to withdraw, they can't withdraw. So this is the main thing. So important, please check index sites like this called CoinGecko. Another site would be CoinMarketCap. So these two that I'm showing you are the top in the world, right? They are generally very well respected. Governments use them for checks as well. So it also lists the top currency, cryptocurrency spot exchanges. So as long as you your exchange that you want to invest in is in this list, right? As long as it's in the list, very at the very least, then you have a better chance of it not being a scam. Now, I'm not saying that all the exchanges listed here are not scams. You have those that manage to get listed and they are still scams. So what you want to look at is the volume. Okay, so what you look at is the volume here. See this 24-hour volume, right? This is what you want to look at. If there is huge volumes, that means it's a very active site. It is very big. It's unlikely for it to fail anytime soon. So just to show back the earlier one, sorry. Okay, just to show back this, all right. If you look at the coin, let's say Bitcoin, and you see the market cap and you see 24-hour volume, you look at this. If these are large volumes, then you can be sure it's quite safe. Right? So important for you to look at. So important. Anytime someone asks you to go buy a coin, please check it up on these index sites. Anybody asks you to go to an exchange and put in your money there, also please make sure it is on a site that is listed here in CoinMarketCap or CoinGecko. Okay, both have this list. So I can't emphasize this enough. It's important for you to check. Okay, so just to give a little plug on our exchange, I'm going to give a short overview. It is beyond the scope of this webinar in order to give in detail step by steps. That will take an hour plus. So what I'll do is I will show an overview first and a link to the guides. All right, a link to the guides on how to do a step by step. So first of all, you need to sign up. All right, now do know that whatever I'm mentioning now, it is a general overview. The other exchanges, the method of trading on their sites is the same. Most exchanges in the world, the concept is the same. Okay, so first, number one, you need to sign up. All right. Now, to sign up, you need an email account. So you have to get that ready first. You must be able to log in into your email account at the time of sign up. So what we will do is we will send you an email, and in your email there will be a link. You click on the link, then you will have signed up with us. Okay. So once you click on the link, it'll take you to the site to do verification. Okay. So verification is your KYC verification. It's similar like you go to the bank, right? Nowadays, they will ask you for some documents. So for us, it's the same. We need your ID. So if a passport, if you're not Malaysian, you need a utility bill or any sort of government bill. So you're talking about TNB bill, water bill, telephone bill, credit card bill, bank account bill is accepted as well. Bank bills, your tax bill, your Bursa Saham bill, as long as it is a bill by a utility company or government linked company or government bill that is dated in the last 3 months. Reason is because we need to know where you are physically located recently. All right. So it is important because this is a regulation required by the government. So you need to have this. Then third, you need to have a handphone or webcam. This is because we need to take a selfie of you when you verify on our site. Right. All our exchanges in Malaysia is the same. You need to verify yourself because we need to make sure you're not some Nigerian prince with somebody's stolen IC signing up for an account. So this is the reason why you need to have these three items here. Okay, that's for verification. Then next, you need to deposit money. Right? You need deposit ringgit and you need to have a bank account. So when you have the ringgit, you deposit, you have to register a bank account with us. Now, again, it is a regulatory process where a requirement where you need to make sure you enter your own bank account. Right? You cannot enter your wife's bank account, your son's bank account, your friend's bank account. You cannot. It must be your bank account under your name. The reason is because this is for anti-money laundering rules. They want to make sure that you are not taking money from a terrorist or drug laundering organization's bank account somewhere else to deposit into our exchange to buy Bitcoin and send to somewhere else. Right. So there are reasons for all of this. Okay. So important when you do a deposit, you need to register your bank account with us. Do note that when you do all these, you only need to do it once. Once you've done all this once, you can deposit without needing to submit anything else. Right? So let's deposit. Then you will have to trade, right? You buy and sell trade. So I'm going to show you our website. So you can see over here, this is to trade. Okay. So again, to explain everything here is beyond the scope of this site or of this webinar, but I will point out to you where you can do further research. Okay, what you see here is a typical trading page of a cryptocurrency exchange. So what you see here is usually seen in all other cryptocurrency exchanges, right? So you only need to learn one time. Once you learn one time how to read and recognize these numbers and these charts, you're able to use this knowledge in any cryptocurrency exchange in the world. Okay. So number one, you have to understand what this is, right? You see what I'm circling here? This is called the order book, right? The order book will list all the orders that are up for sale or for purchase. Okay, for sale or for purchase. So everything on the green side here are basically orders for people who want to buy Bitcoin, right? And everything on the red side called the ask side are orders for people who want to sell their Bitcoin. So bid and ask, bid and ask. Bid is for buy, ask is for sell. So green and red. Okay, so this is the order book. So in order to understand further, you need to understand what market maker is, what market taker is. Again, beyond the scope of this seminar, but do go and read up what an order book is and understand how to read up an order book. Okay. Next is this chart. Now you can see, like, you see all these charts in all the exchanges. What this is called a candlestick graph. So candlesticks is also something for you to understand. How do you read a candlestick? If you can understand it, then it makes it easy for you to invest Bitcoin. It's easy for you to try and time when to buy, when to sell. Okay, now do note that at the very basic, if you have to learn any chart thing at all, to read the chart, always understand the candlestick graph first. Right? It is part of technical analysis, and it is a way to understand human emotion, right? Because markets are usually run by human emotion, whether you are fear of missing out, or whether you fear that suddenly there's a big rate drop. It's human emotion. So candlestick graphs are important. It's something that wasn't invented recently. It was invented hundreds of years ago in the Japanese rice markets. So something for you to understand: candlestick graphs. All right. Then here on the left side is where you do the actual buy and sell, right? Buy and sell. So so a simple way of doing it is, in our exchange, you can basically just click best buy if you want to buy. Type in the amount that you want, let's say this amount, and then just click buy. Yeah, that's as simple as that. You want to sell your Bitcoin, click best sell. It will choose. You see this price here, 230,000. It's the same price over here, 230,000. If I click best buy, it's the same price over here, 234,000. Same, right? Then you just type the amount that you want to sell. So let's say best sell. You type the amount, right? And then you just click sell. And that's it. You will sell your Bitcoin. So simple as that. At the moment, what we have now is a limit order. That means you actually place an order into the order book. Now, our charges are 0.5%. If you are a market taker, again, do read up what an order book is to understand what a market maker and market taker is. It's a bit complicated. If you place an order without someone executing an order, okay, let me rephrase that. If you are placing an order that doesn't execute something that is on the site, then you are what we call as a market maker. You actually provide orders to the order book, right? So I'm going to give you an example. So let's say I want to place an order at 231,000. So you see the price is 230,000, right? So I place it 231,000 and I click buy BTC. So you notice here the price has become 231,000 over here. You have become what is called as a market maker. You place an order without executing anybody else's order on the order book. And if you do that, we pay you 0.25%. We actually pay you money for trading our platform if you do it this way. Yeah. So this is something for you to understand. There's a market maker, market taker. Market taker is if, let's say, I click this right now, okay, and I want to click buy. I execute somebody else's order. That's called a market taker. And that one, we will charge you 0.5% because you save time. You execute your order immediately. If you're a market maker, you have to wait for someone to execute your order. So again, that's just a brief overview. I will heavily suggest that you read our guides. I will be showing where to get our guides, or you can contact our support as well to ask questions. And of course, do your preliminary research before going on in trading, because just a trading class alone can take a couple of hours. So okay, so let me get back to this. And yes, after trading, you can then withdraw. So once you've withdrawn, you can withdraw only to the bank account you've registered with us. Right? This is to make sure that we know that you are depositing from your account and you're withdrawing back to your account. Right? You're not allowed to withdraw to maybe your wife's account. You can't. Right? Because we don't know if you're withdrawing to, let's say, a terrorist bank account somewhere else. We don't know. So that's why this is one of the rulings by Securities Commission. So these are our step-to-step guides. Let me show you how to get to them. So if you look at our site here, and if you go all the way down, right, you scroll down, you see there's a guide here. So you click the guide here, and then you see there's a step-by-step guides. There are FAQs here for many other questions as well, but I would suggest to click on the step-by-step guides. And then there is a step-by-step. How do you sign up? How do you verify? There are lots and lots of steps to do it. We have all the pictures taken, where to click, where to see. So if you look through one by one, you'll be able to have a clear picture on how to use it. Okay. So again, This will be uploaded to the SC's InvestSmart YouTube channel. So you'll be able to look back at the video and look at our numbers here, or you can go to our social media pages. We do have webinars uh, fortnightly, every second week and fourth week of the month. We have like these full walkthroughs, how to buy, how to sell, how to trade, how to where to click, exactly what to type. So we have them every second week and fourth week of every month. So do look at our social media pages for our announcements. So that's the end. Thank you very much. We are now open for Q&As.
Okay, thank you, Mr. Daniel, for the very informative presentation. So, like Mr. Daniel said, we will now take some time to allow Mr. Daniel to pick some questions and to be answered before we move on to the pop quiz.
Okay, great. All right, so I see one question on Slido. What are the fiat currencies that are supported by the platform? At the moment, we only support Malaysian ringgit at the moment. All right, Malaysian ringgit. If you are from a country outside and you want to do a telegraphic transfer to our account, or rather to our trustees account, it will be converted to ringgit. So yes, only ringgit. Will there be a break in the system? Okay, I'm not quite sure what this question means. Maybe it means trading break, I suppose. So yes, there are trading breaks in case there are large whales, large traders who try to manipulate the system. There will be trading breaks. What are the coins I can trade on Synergy? You can at the moment you can trade Bitcoin and Ethereum. We have many more coins on the pipeline, but we are waiting for approval and for our systems to list it up. So there are more coins. What about ICO? Okay, so Malaysia is coming out. The SC is coming out with the IEO, right? It's the equivalent of ICO, except that the initial offerings are done on exchanges. So by operators, by IEO operators, do keep a lookout. Of course, we as an exchange at the moment, we do not accept ICOs. We are waiting for the IO guidelines and operators to come out before we can do that. But it'll be within this year. Okay. So how to value the crypto if this is an investment? Okay, so yeah, it depends on whether you buy low and sell high. I'm not quite sure what you mean by how to value the crypto. The pricing is based on our site. But do note the value is different from exchange to exchange. So if let's say you buy in our place and you sell it somewhere else, your gain, if it's in ringgit to ringgit, then no issue. But if it's ringgit to USD, it depends on which FX rate you use. So again, it depends on how to value it. It's a long answer. Gains from trading in crypto, is it taxable? At the moment, we don't have solid guidelines from LHDN yet, but do note that it is recognized as a security. So because it's a security, by default, even though we have no capital gains tax, that means if you hold it for a long time and then you sell it years later or many months later, we do not know the actual cutoff time, and is seen as an investment by LHDN, then technically it's not taxable. But they have not given a solid answer yet, right? So be careful. Do keep a record of all your trades. If you trade on a regulated exchange, all the records are with us, so not an issue. But again, nothing from LHDN, no real guidelines from them yet to us. So yes, will they do back tax? We are not sure. Can I trade Dogecoin on a platform? No, not yet. Not yet. We are not sure when. Okay. When we buy sell Bitcoin, do we buy sell crypto from you or from the market? You are buying the crypto from the market. It is a free market. So yes, it is from the market. What happens when BTC reaches the maximum number? Okay, so if BTC reaches the maximum value, let's say 21 million crypto, So it's supposed to be the maximum inflation it can ever reach, right? Will it devalue, will it appreciate? At that point in time, if it's still a speculative market, then it will still be going up and down. So likely, I mean, if you follow economic theory, it shouldn't devalue. If you follow economic theory, but if it's still speculative, by then it can still go up, still go down, right? So okay, can we withdraw the profits by online transfer? Yes, you can withdraw BTC from our exchange at any time. You can, if you sell for ringgit and then you want to withdraw by online transfer, yes, of course, anytime you can withdraw from us, anytime. All right. Do note that when we withdraw, it's via IBG. So when you withdraw, it takes about, it depends on the IBG or gyro cutoff time. But if deposit is by instant transfer, then it's usually quite fast. Okay. So quite a number of questions on the chat itself. So let me look at this. Okay. Okay, so why need to check the transaction ID from Jeffrey when one can, you answer that already? Huh? Okay, wait. Sorry, I'm because my guys have answered some, so I'm just going to go to the side that hasn't been answered yet. Wait, sorry, hold on. This one. No. Sorry, hold on for. Okay, so there's a question about why you need to check the transaction ID, right? When you can check your crypto e-wallet account. So here you have to understand that e-wallet accounts, there are two types. One is the e-wallet account that is based on the exchange. That's not your real wallet account. It's actually an account based on the database in the exchange. Then you have an actual e-wallet account. It's actually a cryptocurrency wallet account where that one will be encrypted, definitely, right? So again, it depends what kind of wallet account you're talking about. So if it's a crypto wallet account, then yes, someone can hack into it, right? Especially if it is a hardware wallet account. If it's an online wallet account, you have to make sure where this wallet account is. So again, it depends. So answer to your question is that if it is a wallet on a platform, it may not be a true wallet, right? You need to hold a private key to the wallet in order to be sure. Whereas if it is your own, you're holding a hardware wallet or you're holding the private key to a wallet online, then yes, that belongs to you and that can't be hacked. So again, it depends, right? If you don't hold a private key, it's on a platform, especially unregulated ones. Anybody, especially the operators of that platform, can make changes to your wallet. So that's why having a TXID is important. Okay, so let's see what else. Okay, so there's a question. I was wondering why our country considers crypto as a security while Japan recognizes it as a currency. So what is the implication for our country if crypto is considered a currency? Just wondering. Okay, so here's the answer. First of all, Malaysia is a capital controlled country, right? So capital control meaning that our regulators control capital flow in and out of the country for various reasons, for various economic reasons. I'm not a macroeconomist, so I can't really answer why. But I do know that the regulators do it because we are capital control. Now, if you notice, you want to try and buy ringgit outside, it's a bit difficult. Outside of Malaysia, that is, it's a bit difficult. So there are macroeconomic reasons why they cannot recognize it as a currency. Also, it is safer as a security to define it as a security, right? It's safer, meaning that it can be well controlled. As a like it can be treated like as if it's a stock in the stock market. So it becomes a easily defined medium. That's why. So okay, what happens if your platform is corrupted or compromised with the trust account maintained at bank be useless? Since my e-wallet account that store the cryptocurrency retrieval, how the investor be protected? Okay, so I've mentioned this in the webinar. In the webinar, so basically, if let's say something happens to our platform, right? We run off overnight. So number one, the trust account in the bank is under full control of the trustee, not under us. So they'll be able to have your money, right? So and there are actually measures to return the money back to the investors. So that's for the trust account at the bank, meaning the ringgit account. Your wallet account that stores the cryptocurrencies, like I explained earlier also, even though you need both our key and the trustee's key in order to open the wallet at the same time, there is a third key that is held by a third party security company, right? And what they do is in case of emergencies like this where either party disappears, then they will step in with proper legal procedures by the remaining party in order to provide the key, because they hold the key, to provide the key in order to open the wallet to do the withdrawal. So that's why it is safe. So is this okay? So a question by Edwina Low: is this income taxable by LHDN? Okay, so I've already mentioned that. Um, I cannot speak on behalf of cryptocurrency itself. But again, it is recognized as a security. So technically, if it is an investment, it is not taxable because Malaysia does not have capital gains tax. Is it taxable if you trade very often? I can frankly tell you there are no guidelines out yet. There's no memo given to us by LHDN yet, so I can't answer that. But technically as a security, yes, technically. All right. But as a crypto, I do not know. No guidelines yet. Okay. So is investment in crypto Sharia compliant? Okay. This is something from what we understand in the last invest smart. There was actually a seminar by the SC where they say um, it is I wouldn't say it's Sharia compliant, but is it halal? It's still up there. But yes, they did say it was compliant. It's harus. I think the word used was harus. So it's not haram basically. But again, this has been debated. At the moment, it seems the consensus is it is Sharia compliant. It is harus, so to speak. Okay, let's see what are the questions. Yes. Okay, so let me look back at Slido. Can I buy in ringgit and subsequently sell in other currencies? Well, you can buy in ringgit, and if you want to sell in, let's say, Thai baht or whatever, you will have to send it to Thailand exchange and sell it there. So yes, but not in a Malaysian exchange. Possible to short Bitcoin? No. I mean, not in Malaysian exchange. You can short it in other international exchanges, but not in Malaysia. Not yet, hopefully. Okay, keys. All these three keys that I mentioned, is it standard for all DAXs in Malaysia? It is one of the standards. It doesn't mean all the other DAXs follow the same standards. They could be tougher standards. Some have 5 keys, 6 keys, 7 keys. Some don't even have keys. There are more advanced ways of doing it as well, but I do not know what the other DXs do. So for us, it is very safe because they are offline, and you need many people to sign. But again, it depends on each individual DXs. So the question is it standard? No. Is it the minimum? It's over the minimum. Will they at least have the similar or better, let's say, standard of security? Yes, I believe so for their access. How many keys do they use? I do not know. Okay, so Here's the thing. What is your opinion on digital currencies can only work with government backing? Okay, so okay, this requires some context, right? Digital currencies. If you're talking about CBDCs, central bank digital currencies, then of course you need government backing, right? You're talking about those that is minted by the government, like what China is doing now. They have a central bank digital currency that's been rolled out now in China. So those, yes, you need government backing. But if you're talking about true cryptocurrencies like Bitcoin, I believe it works pretty well without government backing at the moment. All right, it's just that with government backing, there is more education, there's more awareness, and when there is more awareness, then more there is a bigger market, and when there's a bigger market, then there's more use for it, and it becomes a and on thing. It becomes bigger and bigger by itself. So, can it only work with government banking? No, but can it work better with government backing? Yes. Okay, so let's see what are the questions.
Daniel,
Yeah.
I think that's all the time we have for the Q&A.
Okay.
Um,
All right.
I guess if the participants have any further questions they have on cryptocurrency or even on your presentation, they can get in touch with Synergy directly.
Yep.
Okay,
All right.
so everyone, thank you. Okay, so Daniel, thank you so much for your presentation earlier, and thank you for answering all those questions. Okay, thank you everyone for joining us today. Thank you very much, Daniel, for your presentation, and thank you to you and Synergy for joining us in our webinar today. Hope to see everyone again at our next webinar. Have a great day.